All right, so today we're breaking down the Goldman Sachs Group, Engulfing, ticker GS, on the daily time frame. The model is calling this one a long, meaning the bias is to the upside. Stick with me, because I'm going to walk you through every piece of evidence: the chart patterns, the candles, the indicators, the broader market. And then we'll lay out exactly where the TP and SL sit. For reference, price is $996.73. Modeled target is $1,040,060. That's plumb 5.1%. Okay, let's look at the chart. We're on the daily time frame, last 60 bars. Price action is in an uptrend of moderate strength. That's our primary directional bias right out of the gate. You can see the dotted lines on the chart. Green is our TP at 1,047.60. Red is our SL at 920.22. Those are the two numbers that matter most in this whole video. Now this is the fun part. The pattern detector picked up two chart patterns on the daily: double bottom, bull flag. I'm going to walk you through each one in the next slides and show you exactly where they formed on the price action. Pay attention to the labeled points. Those are the swings that confirm the pattern is real. Pattern number 1, this is the double bottom. It's a bullish formation with 2 out of 3 strength. 2 troughs. $789. Measured move target, 920.36. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is 7.7%. That's the typical decline once the pattern fully completes. It's a guide, not a guarantee. So we still need our SL in place. Pattern number 2, this is the bull flag. It's a bullish formation with 2 out of 3 strength. Flagpole plus 5.7%, then tight consolidation. Bullish continuation. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is bullish at 5.7%. That's the typical rally once the pattern fully completes. It's a guide, not a guarantee. So we still need our SL in place. Candle signal number 1. 3 white soldiers just formed on the last 3 candles. See the dashed box on the chart? That's where it printed. It's a bullish read with 3 out of 3 strength. 3 consecutive higher bullish closes. Strong, sustained buying pressure. What you want to see next is follow through on the very next bar. That's the confirmation that turns a signal into a trade. Let's talk key levels, because every trade is really just a conversation between support and resistance. On this slide, you've got 2 resistance levels above price, 2 support levels below, plus our TP and SL inside that range. If price breaks above R1 cleanly and holds it, that's the green light for the upside scenario. If it cracks below S1 instead, the long thesis is broken and you stand aside. The TP and SL aren't arbitrary numbers. They sit at logical inflection points, which is why this map matters more than any single indicator. On to the indicators. We've got composite score of plus 0.54, technical plus 0.09. Positive numbers lean bullish, negative numbers lean bearish, and what you're really looking for is agreement across multiple boxes, not just one indicator screaming. ADX is at 17, and that tells us we're in a weak trend regime. Important because some strategies only work when ADX is above 25. On-balance volume is bullish. That's a sneaky good way to spot whether the smart money is buying or selling underneath the price action. Now, even though this is a technical analysis channel, we always sanity check the fundamentals. Here, revenue's growing 14% year over year. That matters because it tells us whether the chart is rhyming with the underlying business, which is when the highest conviction setups happen. Zooming out for a second, let's talk macro. On this slide, you've got the primary trend, its strength, the ADX number, and the volatility regime measured as ATR %. Here's the thing. A setup that looks textbook in isolation can totally fail if the broader regime is fighting it. So you want to ask, is this trade swimming with the market current or against it? The 5-day and 20-day moves at the bottom answer that. News and sentiment are mixed right now. No dominant story pulling price one way or the other. When that happens, we just lean on the chart and trust the levels we drew earlier. Now this is the slide nobody on YouTube actually talks about: risk management. On screen, you see the dollar risk per share, the dollar reward per share, and a position sizing table built around the 1% rule. The rule is dead simple. Never risk more than 1% of your total account on a single trade. So if you've got a $10,000 account, you're risking $100 max. And that decides the share count, not your gut feel. Get this right, and you can be wrong 10 times in a row and still be in the game. Get it wrong, and one bad trade can take you out. Okay, so here's the actual trade plan, all in one place. Bias is long. We'd look to enter near $996.73. TP, that's the take profit, sits at $1,047.60. SL, the stop loss, sits at $920.22. That gives us a risk to reward of 0.66 to 1, and the horizon is roughly 5D. One more time. This is educational, not financial advice. Markets are risky. Trade your own plan. Never risk what you can't afford to lose. If this breakdown helped you, smash that like button. It actually helps the channel a ton. And hit subscribe so you don't miss the next deep dive. All right, quick recap before we wrap. On the daily, GS's signal is long. Top pattern, top candle, composite score, and the projected move are all on screen. That's the plus 5.1% projection. TP is 1,047, SL is 920.22, risk reward 0.66 to 1. If this video earned its spot in your feed, do me a favor. Hit like, drop a comment with the ticker you want me to break down next, and subscribe so the algorithm sends you the next one. Trade safe out there. See you tomorrow.